Trading contains substantial risks and is not for every investor. An investor could potentially lose all or more than the initial investment. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. This presentation is for educational purposes only, and the opinions expressed are those of the presenter only. All trades presented should be considered hypothetical and should not be expected to be replicated in a live trading account.
It might be a false breakout of NQ, so I would be careful.
You mean it would do continuation to the upside?
No, it will get back down.
Yeah, it is heading back down now.
Yeah, this is the problem of lagging conclusions, like saying RTY is going up. RTY is going up to hit its resistance.
That's why we have market, because people
Yes.
say short, other people say long, and then you can figure it out.
Be careful of false breakout, guys.
Keep going, keep going, keep going. Keep going, mister.
There are so many room in the upside. It just wants to go up higher.
Yes. Look, right now, RTY hit the support line, sorry, the resistance line.
And now NQ is going back from its false breakout.
Yes.
Yeah.
So who was correct?
Yeah, but the drawdown was too big for me. It's,
I know, that's why I time my entry according to
10 points.
the
That's a lot.
correlated. Yeah, I didn't short exactly at the line. I anticipated that RTY wants to hit its resistance, so I waited and I timed my entry.
Wow. Okay.
Can you
Okay.
see? Can you see how I timed my entry?
Yes, you're right.
I timed my entry. I could see it's a false breakout.
Oh,
Okay.
very nice, very nice.
Yes, made a false breakout. YM. Few reasons why I was biased to short, okay? First, because NQ already made a large movement to the upside. So in terms of daily ATR, I start looking for short rates. Second, because of RTY wanting to hit its resistance here, large move above, it's probably a false breakout. Then I need to time my entry according to RTY's line. Now, the reason I'm trading on a sim account is because I'm in a big consistency trouble, guys. You know, I like to catch large moves. So when I hit my daily target, I'm moving to a sim account to demonstrate you guys the way I view the market and time my entry when I think that the direction should be retracement. Okay, based on daily ATR. NQ already made a huge move to the upside. Okay, NQ hit almost today's support 2. Okay, there's no reason for me at this point to look for long entries, especially when there's a large move above RTY. RTY also had a large movement, so to me it was a false breakout. So when I identify a possible false breakout of NQ, and I know what the reason for this false breakout, okay, the resistance lines of correlated assets, I time my entry on NQ. And usually, guys, when I do it, I catch the low or the high of the day.
Very nice, very nice.
Yeah, it is very beautiful. And different is asking, can you get in and then get out in like seconds? That depends on your target, if it's hit within seconds or not. For example, the doctor follows always the big runs. For me, I follow 25, 30 points, 50 points on NQ, 5 to 10 points ES. Domonkus likes to get in and out within 2-3 points on ES. Same thing, 5-10 points on NQ.
Okay, so again, the reason I looked to sell the market is the large movement that I expect NQ to retrace. Now, regarding the timing, it highly depends on correlated resistance line. Okay, to me, this also was a false breakout of ES and false breakout. RTY is the huge troublemaker.
And why would you say, or how could you tell that it's going to be a false breakout when you, because I remember that you said it's, guys, watch out because it might be a false breakout, but
And I told it
yeah,
several
but what
times.
indicated that?
Yeah, and she said also timing your
Okay,
entry. Yes.
several reasons. Okay, and I rely on statistics, of course. The fact that there is a large room here, but the market already made a huge movement to the upside, the probability of hitting the next resistance is very low. It needs to retrace beforehand. So I didn't look to buy the market here. This is one reason. And the reason I didn't sell the market here is I could see that RTY wants and needs to hit its resistance. So I waited, and then I timed my entry, selling NQ. Okay, so the reasons are statistics. The market already made a large movement to the upside. And
When you say the large, then do you compare it to the ATR, or why do you say large? Or what does large mean?
yeah, I compare it to the daily ATR, to the average movement, average daily movement, or on all of them, by the way. All of them made a large movement considering their daily ATR, their average movement. So yeah, maybe NQ, after this retracement, maybe NQ will go up higher, especially when there are news. But not at this point. It already made a huge move. It must retrace, especially when there's a resistance here, and the next resistance is far away. So to me, it was a false breakout, and I knew why. This was a false breakout, not because the market wanted to trap you guys, but because RTY wanted to hit its resistance here. After a large movement to the upside, for RTY, it's a huge movement. Okay, so I waited for RTY to hit the magnet, which is the trigger point. Now, which magnet? One of them. Okay, I timed my entry according to the next level, the third one. Statistics, guys. It's all about statistics. I do not rely on lagging conclusions like, oh, they want to go up, yeah? They want to go up. They want to go up to hit its resistance and then to retrace. This is how I explain the movement. Now look at my entry, guys. It's 1 minute, 1 minute time frame. Look where my entry was. These are my best trades, by the way, guys, to look for, to wait for enough movement done by the market in terms of the average movement I expect daily. And then I wait for synchronization, hitting resistance. I'm not falling into traps of false breakout. Okay, it's not a trap, guys. This is not a trap. This is because RTY wanted to hit its resistance. And there's a large room above resistance, and this is why I do not anticipate that they will keep higher. Because of there's a large movement, and they already made a large movement, I looked for short opportunity. Okay, guys, what I'm demonstrating here was a very easy trade. Very easy trade.
I mean, yeah, I'm doing well today. Although the first trade, the ES trade, I went long when doctor said that I should go short. But many times I just go after my head, and after a couple of weeks or months or year, when I realized that whenever Efrat says something, then we need to listen to it.
EG Indicators are introducing the EG Super CTP. This indicator implements Dr. Levy's CTP methodology, where multiple instruments are monitored in real time to find trigger points that align. This can help you increase your winning rate and risk-to-reward ratio. The CTP methodology, conceptualized by Dr. Levy in 2023, represents a paradigm shift in correlation trading by transcending traditional statistical correlation analysis. Instead of merely quantifying the correlation between price movements over time, the CTP methodology focuses on the synchronous reactions of correlated assets to key levels. In this innovative approach, correlation trading is redefined as the analysis of real-time market responses of correlated assets at significant price zones. The underlying principle is to observe how different assets behave when they simultaneously reach key levels, thereby identifying assets that tend to exhibit concurrent or opposing movements. This insight can grant traders a strategic advantage by recognizing potential trading opportunities rooted in the immediate interplay between assets. During her research, Dr. Levy developed the EG-CTP toolkit, which leverages this methodology. It utilizes the EG trigger point levels and continuously monitors the synchronous reactions of multiple assets to those levels. Unlike traditional correlation measures that are inherently lagging, the CTP methodology provides you with concrete, actionable insights in real time. In fact, the CTP methodology can help traders capture the real-time interplay between correlated assets, thus enabling them to make more informed decisions grounded in current market dynamics, rather than retrospective correlations. In this video, Dr. Levy trades her live accounts, demonstrating how she views the markets following the CTP methodology she teaches in her mentoring program.